Hey guys, Adam Manley here from Good Life Property Management, here today to talk to you guys about 5 things you need to do before you become a rental property owner. Now, this applies whether you're working with a property manager or not. These are 5 things all rental property owners should consider before they make that forte into renting their property out and becoming a landlord. So the first step is having it owned correctly. And what I mean by that is the actual ownership of the property. Consider some things like starting a trust or an LLC. Both of these two options will help insulate you from the property should something happen to you guys. It's just a good way to keep things separate, your business and your personal items separate. So that's number 1, is actually having it owned correctly. Now, the second thing you'll want to consider is finding the right accountant. Unless you're a CPA or do this for a living, your tax situation once you start renting out your property could be very different from your current one. Owning a rental property opens you up to a lot of additional tax deductions that you can take advantage of, and the additional income that you may be generating from this property may create some unforeseen tax situations. So it's highly encouraged that you find a really solid accountant before you start off on this process to really help you fully understand those challenges. Now, the third thing you're going to want to consider is organization. And there's lots of things to organize, but one of the best ways to keep yourself organized when owning a rental property is by actually creating a separate bank account for each rental property that you have. This is a really good tool because you'll know anytime you write a check from that account, it belongs to that property. You'll know with a very high degree of certainty that it's an expense associated with running that rental property. And this just helps tax time. It just makes tax time a lot easier at the end of the year when you know that everything in this account was an expense for this property, everything in this account was an expense for that property, and it will just help create a much more clear tax experience for you at the end of the year. So the best way to organize is by creating separate bank accounts for each property. Now, the fourth item you'll want to take into consideration is maintenance. So as a rental property owner, the amount of money you spend on maintenance is actually going to differ on a few different factors. Of course, how much deferred maintenance you've actually done over the years. The other one is the age of the property. There are a couple of different tools or tactics that you can gauge or estimate how much you'll spend in maintenance. One of them is the 1% rule, where you take 1% of the purchase price of the property and you use that as your annual maintenance cost for the year. The other way is just budgeting about 1 month's rent. That's kind of a little bit of an easier way to do it. And again, depending on the year and the deferred maintenance, you might need to make some smaller adjustments, but those are 2 ways that you can budget appropriately for maintenance before you become a rental property owner or a landlord. And finally, wrapping it all up, the last thing you'll really want to do, and this is one of the most important ones, is getting the right insurance amount. Speak with your insurance agent directly. Let them know you're going to be renting out your property. They'll make some really good coverage recommendations to you. That's going to also depend on if you own other properties or the size of your portfolio. I would recommend considering at least $1 million in liability coverage if you own a property here in San Diego or California. But definitely cross-reference that with your licensed insurance agent so they can make different or more appropriate recommendations depending on your situation. So just to wrap it up, guys, the 5 things you'll want to do before you become a rental property owner: get it owned correctly, get the accounting picture figured out, get yourself organized with some separate bank accounts, budget for about 1 month of maintenance, and then get your insurance all squared away. These 5 tips will set you off on a great starting path to become a successful rental property owner. And if you guys have any other questions, feel free to drop it in a comment below or reach out to us directly. Thank you.